Hello traders, the title of the video is top-down trading for weekly chart traders. Are you a weekly chart trader? Do you use the weekly chart for technical analysis? Very good. Today we want to talk about a top-down trading for weekly chart traders. A top-down trading is also called a multiple time frame trading method or different time frame trading method. As I've been saying before, one is not trading like a pro if one does not master the different time frame trading method. And I mean it, alright, I mean it 100% because when I start trading first, I do not understand what is a multiple time frame trading method, and I was doing all sorts of things in the financial markets, annoying the professional traders and the big financial institution, until I realized that one should always apply the trading drill, and most importantly, use a different time frame trading method. All right. So if you want to begin, to learn to trade like a pro, you must start learning how to use a different time frame trading method. All right. And in this tutorial, I will show you clearly how you can use the weekly chart, for different time frame trading method. Let's begin the demonstration. Okay. Same thing we have said before. All right. Same thing we are talking about before, because the same thing the financial instrument is doing all the time. All right. So if you are feeling bored, it means that probably you have to start learning about fractal pattern or Elliott waves. All right. The setup, the signal, and the low risk entry point. The setup must be on a specific time frame, the signal on a different time frame, and the entry on another time frame. This is a different time frame trading method. All right. Now, for the weekly chart, we are looking for a trading setup. When we identify or recognize a valid trading setup on the weekly chart, we will go to the signal time frame, which is the 2-hour time frame or 4-hour time frame. So weekly chart traders use either the 4-hour time frame or the 2-hour time frame for the signal. Personally, I prefer the 2-hour time frame. And then they will use the 15-minute time frame for the entry. This is weekly chart, 2-hour time frame or 4-hour time frame, and 15-minute time frame. That's it. So how do we do that? All right, there it is. On this chart, we are looking at the financial instrument NetEase.com Incorporation. We can see that the price is going up, forming higher lows and higher high. So recently, the price formed a higher high, followed by a higher low that is retesting a bullish trend line. So we have a bullish trading setup right here on the weekly chart. Here it is. All right. So are you a swing trader? Are you a day trader? You will apply a top-down trading method. Are you a position trader? You will apply a top-down trading method. So we have right here a bullish trading setup, price retesting a rising trend line after forming a higher low. Same thing, my friend, is happening all the time. So we are repeating ourselves because the price doing exactly the same thing all the time. Now we go to the signal time frame. I will go to the 2-hour time frame instead of the 4-hour time frame for the signal. So the signal, you see where I placed my vertical line, that's where, the setup was taking place on the weekly chart. You see the vertical line there. That's where the setup price was retesting right here. The rising trend line, okay? So on the 2-hour time frame, we will wait for the signal. So on the 2-hour time frame, you want the price to break above, okay? So you see here, there was this channel, the price was declining on the 2-hour time frame, and to retest the moving up, the rising trend line, the best signal is right here. It breaks above that 2-hour time frame channel and retests it here. That's your signal right there. And from there, you will go to the 15-minute time frame to enter the trade. There's another signal here that more advanced traders can handle because the risk is quite low. You can see that as the price retests this red trend line on the weekly chart, on a 2-hour time frame, the price forms a double bottom chart pattern. Here it is. This is another signal because we have a bullish chart pattern. All right. So a bullish signal is why price breaks above a horizontal channel. Price breaks above horizontal channel, retest it. Price breaks above a declining channel, retest it. Price breaks above horizontal support or key level, retest it. Or we have a bullish chart pattern. Here we have a double bottom on the edge of the rising channel. I might say personally here, but if you are entering here, it's a little bit risky because you are still in a declining channel. But it worked beautifully. You can see it finally pushed it through. If you are entering here, it's a low risk entry point. Hold on, please. Now, you may use this as a signal because you are not going to enter here, but you will have to switch to the 15-minute time frame to enter the trade right there. But if on a 15-minute time frame you are entering the trade here, you are still in a declining channel. Therefore, you need to control the trade carefully until it pop out of the channel. But the advantage of this signal here is because your stop loss will be below the red channel, which is very, very good. All right. So if you manage on a 15-minute time frame after this signal on a 2-hour time frame to enter the trade, you have a great advantage to have a low risk entry point. But the best signal is taking place right here above the channel, breaks above, retest. This is what the price doing all the time. That's why we are talking about the same thing over and over and over. There's nothing new in the financial market, unless we create a different stock market. So this is a signal here, breaks above, retest on the 2-hour time frame. And then from there, if you go to the 15-minute time frame, you won't see this spot here because it has been a long time. So let's go to the 15-minute time frame. You see, those spots are still here. Okay, hold on, please. Color this one into red. And then we switch to the 15-minute time frame. Hopefully we'll see that. We can't see the red spot, you see. So the red spot is not here on this chart at all, which means somewhere in the past here. All right. So it's none of those spots that you see here. None of them, okay? Somewhere. If I go to the 30-minute time frame, probably you'll see it. That's the red spot there. All right, that's the red spot. But we will enter the trade on the 15-minute time frame. To avoid that the video is too long, it's very simple. Top-down trading for weekly chart traders. The weekly chart traders will look for high probability trading setup on the weekly chart. When they identify a valid trading setup on the weekly chart, they will switch to the 2-hour time frame or 4-hour time frame, waiting for a clear-cut signal. There was one here and one here. Once the signal is in place, so always when you see a signal, draw a line. So the reason why, so let's talk about this, because you need to understand this here, especially if you're a new trader, there is no trade without risk. There is no 100% guaranteed trade without risk. All right. When I start trading first, I was thinking that there's nothing like that, nothing, no magic one. Always. The trader must control the risk. A setup that is bullish can end up being a losing trade, and we need to control the risk. Always, okay, always. It would be nice if there's something that we can say is guaranteed in the stock market. Nothing like that, okay? So when the signal is fired, draw a line. So you will draw the line, you say prior to bullish signal above, prior to bearish signal below. This allows you not to force it, all right? You have a limit how far you want to take it. So you are looking to buy above that line that I draw. So here it is, the signal is fired, draw the line there. And then you switch to the 15-minute time frame for the entry. All right. The entry is another signal again. So break a bow, retest either a channel, either a horizontal channel, either a triangle, breaks a bow, retest a triangle, or breaks a bow over a normal key level. Is that the signal, or you are looking for bullish chart pattern? Though, my apology to traders, those are the signal. But the entry is a signal that is taking place on the entry time frame. All right? So this is it, very simple. Right? Weekly chart, 2-hour time frame, 4-hour time frame for the signal, and 15-minute time frame for the entry. When you enter the trade, it's not finished yet. You must manage the trade. Again, to polish it more, all right? To polish it more. When we see a trading setup like this, all right, do me a favor, go to Google Finance, check the economy news relating to NetEase, check the economy news relating to the related companies, the peers of this company, the technology sector, to know what's happening there, because the economy news can change the dynamics of the technical analysis. Very often, you may see a beautiful, gorgeous, bullish trading setup like this, but due to the economy news or economy news relating to other stock that belongs to the same sector, the trading setup may fail. Not because it's an invalid trading setup, but because the economy news and the market sentiment, the shifts of the market sentiment will affect your technical trading. I need to talk about it, all right, because you need to know, all right? It's not all about technical analysis. When we see a price forming a higher low after a higher high, it's looking good. But there are other things behind the scene that can pull the plug under that trading setup. Those are economy news that are happening relating directly to the financial instrument that we are trading, or other stocks that belong to the same sector, especially the market leaders. I cannot talk about everything in this video. I've been recording video on YouTube for years at 24aliawave.com, at 24aliawave YouTube channel, at Daypro Trader YouTube channel, okay, at 24 Stock Trader YouTube channel, and so on and so on. So in this tutorial, my objective is to stay focused on the topic, which means top-down trading method or multiple time frame trading method. All right. For a weekly chart traders, it consists of identifying or recognizing a valid trading setup on the weekly chart, then go to the 2-hour time frame or 4-hour time frame for the signal, and then use the 15-minute time frame for the entry. If the signal fell, which is very, very important, one must close the trade and walk away without blinking. All right. This is the end of this tutorial. If you have any question or suggestion, put in the comment section. And in due course, I will be recording another video to answer your specific question. If you find this video useful, truly useful, give us the thumbs up. If you think that this is another blah blah blah, let us know by giving us the thumbs down. If you think that this is an essential tutorial, feel free to share it on Google+, on Twitter, and also on Facebook. Until the next time, enjoy yourself and be very happy. We are the TSTW24 traders, talking about top-down trading method for weekly chart traders. Happy trading to you all, and speak to you soon.